All right. Um, Welcome back to this channel. And our topic for today is RDBMS accounting. It's more like an introduction. Yeah, but our main objective is to reproduce the results of traditional accounting through database setup. For some refresher on the journal, ledger, trial balance, financial statements, and a quick overview of the database design, creation of tables, and the querying of our database. So, to begin with, let's have a refresher on nature of accounts. So, you only need to familiarize with five accounts, right? So, we have the assets, liability, equity, revenue, and expenses. So, these are the five main accounts where everything like cash, as you can see, actually there's more, and there's really no standard naming for these accounts. But more or less, there's what we call gap, but we'll not talk about that in here. So anyway, so the five accounts, what we only need to take note for this is whether we would increase or decrease, right? So as you can see, you have here debit and credit. It simply means left and right. So to demonstrate, this is left, this is right. So if it is an asset and an expense, as you can see, it has a normal balance of debit, right? So in here it's a plus, and in here is a minus. Okay. Now, if it's the other three accounts, we have the liability, equity, and revenue. It's the opposite, minus in the left side and plus on the right side. Okay. So this is our general journal and general ledgers. So just a quick overview. General journal, this is where the official documentation of our debits and credits with all the supporting documents and signatories. Okay. So the first journal entry is cash, and of course the ownership worth 5,000 equity. And then the second one is the start of the business, purchasing the goods for sale. And then finally, the goods, I mean the sales of the goods. All right. And then we have posting. And then first 5,000. And then the second one, this is how the traditional accounting goes, right? So let me break this down for you. Um, so this is just a simple. So the first journal entry is this one, right? Investment worth 5,000, and the second one is this purchasing of the inventory for goods for sale, rather. And then the sales worth 10,000. So this entry right here goes here and here, right? So here's the equity, and if you notice, is an increase because this is equity, and this is an asset, and therefore this is an increase because this is on the left side and this one is on the right side. Then the second one is 3,000 worth of inventory, and then the cash decreased because of course we paid cash, and then we purchase inventory worth 3,000. Both are assets. And then the last one, we sold it for 10,000 and we received cash. That is why we debited it, and it's an increase. And of course, the sales is an increase. This is a nominal account, as we shall see later. So let's proceed. So here, excuse me. So let's proceed. We have here our adjusting entry. Now we need to adjust because we did not recognize the cost, right? So it's just pretty basic. Um, it's common sense. We don't even need accounting here. So if we sold it for 10K, It means we receive cash, right? And therefore, we parted away with the inventory worth 3,000. So every accountant knows this, and we have an income of 7,000. That is why we need to recognize this. We need to recognize this. Sorry. Right. All right. So that is why we posted the 3,000 cost of goods sold, and then so this is our balance sheet now. We have 12,000. We invested uh, for 5,000. We invested for 5,000 and we sold it for 10,000, right? But we parted away with 3,000 because we purchased it. And therefore, this is now 12,000 cash. So an increase of 7K. As we saw a little earlier, we computed the income. And inventory is now zero because we sold it for 10,000, right? And then the equity, as we shall see later, this will increase by 7K, as shall see later, and this will total 12,000. Let's proceed. Right, so these are our final balances, and we already computed this earlier, right? So just to recap, so this is 12K, this is zero, this is 12K. So our balance sheet is actually 12,000 for assets, and equity and liabilities 12K. And of course, these are zero. These are nominal accounts. Okay. So we have to take note of this. The accounting cycle. Actually, this accounting cycle we already have demonstrated the essence. Okay, so we just need to breeze through this. Right. Okay, so here we go. The computer part. Okay, so this is the RDBMS accounting, and for accountants, we really don't. It doesn't really concern us. We really don't need to learn this, but for purposes of analysis and trying to understand what's going on in the hood, then it's also relevant. But for data analysts, this is very important because you are tasked to create ETL, tasks, extract, transformation, and loading, or extract, loading, and transformation, as the case may be. So anyway, let's go back, and we just need to take note of primary keys and foreign keys. This is our main relationships, but we will explain this some other time. We just need to breeze through this, and of course, this insert statements. This is our establishment of our table of chart of accounts. Okay, so this would look like this, and these are, by the way, implemented through a user interface. So again, um, this doesn't really concern as accountants, but for data analysts, you need to learn the insert statements. So, and this time around, this the general journal is being populated through this insert statements. This, and then we might need to, just check uh, our tables, and this is the select statement rather, and the syntax is simple. Just type select, and then the asterisk, and then from clause, and then your table. So our objective really is to get to this type of setup, the trial balance type of setup. Actually, we already computed this earlier, but this is how it would look like behind the scenes, right? So as we shall see later. So let's just breeze through. Okay. So the first select statement would look like this. This is just simple, just to check everything if it's in place, And then the second statement, this is for financial statements and trial balances. And then the last statement is are for ledgers. Okay. So let's go to our Postgres database. Okay. Let's go here. Um, let's try to delete first. Is this created? It already exists. Let's try to refresh. And there you go. It is existed already, and we need to just delete. Yes. So we need to create this for purposes of demonstration. Yes, and so as you can see there, let's just make a quick. Then the table, we create the table, and then we have an error. I don't know why, but we just need to delete that, drop the table, and then create it again, for just for demonstration purposes. And then so again, we have already created that. So when we try to select the table, um, nothing does not contain anything. Okay, so we need to um, make the insert statement. Actually, this is five. Sorry about that. So this is five. Insert, and once we query it again, there you go. So that's our first table. Then we move to the other one, the general journal. We create this. It exists. The table existed already, so we need to drop this again, or maybe not. We already saw how it happened, and let's just check, just to proceed. So it already contained our data. We already saw this data a little earlier. So let's just see this, insert. And then this is what we're looking for. Okay. So we select, and then you go. We have another error. Sorry about that. Let's just delete this for now. Um, so as you can see here, this is a simple checking of the account. The purpose here is just to see if you notice we entered here credit debit. This is to indicate whether our account has been debited or credited, and it is to be compared with the normal balance here, right? So, the idea here is that if we have both, the condition is true that both are debits, then it's positive, right? So if they're not the same, it's a negative. Okay, so that's the idea of our select statement. Okay, so now that we know, we see, we need to perform another query. Okay, another query. So first we this is the FS and trial balance actually. Okay, so if we execute this select statement, okay, so as you can see, we get the balances, right? If you recall earlier, we have 12,000 and 7,000. 12,000 for our equity, 301, and revenue. We haven't closed this yet, so so it's 12,000. That's how it goes. And finally, this is the most important query that I would like to show you is the ledger type. So in the ledger, as you can see, if you have account of, for example, all the cash, let's try to make an order. Let's try to sort this out. Order by whatever account ID. Okay, and try to execute this again. There you go. So we can see here our cash 101. As you can see, this is the true amount is this is where the computation has been done. Okay, so again, the condition that I explained earlier, if it's if the DRCR column is not equal to its normal balance, then we have to multiply it with a negative one. That is why we get the 3,000, right? Because the normal balance is not the same with the DRCR column, which is the actual side of this amount. And this is the amount where we purchase the inventory. Okay, that's why we got 3,000. And the same with this 3,000 here, it's an inventory. This is the sales transaction. Okay, and this is the purchases of inventory. That is why it is a plus, or that is why this is an increase, and so forth and so on. Okay, so I think that would be it. So usually what would happen is for purposes of just showing it to you, this is how the real world would look like. So result set like this would be feed into a report stable or whatever, BI, like Power BI or whatever, or in a Excel, right? So here we would summarize it. You know, we would like, for example, create a VLOOKUP or an index match just to summarize this one. So for example, just to simplify this, right? So auto sum. Okay, so the cash would be 12,000, and then copy this. That's a zero, and of course 5,000. And so this one, because this one, all of this results to 7,000 right here, right? So this has been close to this account. So that would total, this would total 12,000 as well. So this is just an overview on how RDBMS works. Later we would be a little bit more detailed to our accounting. Okay, so this is an overview, and thank you for staying with me, and I hope you will subscribe as we support this channel, and see you later.